Fellow XRP holders, how you doing? Because right now, the chart is not sleeping, the whales are not sleeping, and XRP just entered one of the most important moments of the entire month. Let's break down exactly what's happening right now, the price, the momentum, and the setups that could trigger the next big move. XRP is trading around $2.18 to $2.19, and yes, this move is real. The market just printed a clean bounce after tapping that $2 support zone. Traders are watching every candle because today's price action will decide whether XRP pushes back toward $2.50 plus or slips into the danger zone below $2. In the last 24 hours, we've seen buyers stepping back in, pushing the price up around 7 to 8%, signaling that bulls are not ready to surrender the trend just yet. But here's the bigger story. It's not just retail traders causing this bounce. We're seeing serious ETF money flowing into XRP. You heard that right. Over $750 million in institutional inflows over the last sessions. That means hedge funds, big firms, and major financial players are accumulating XRP even while price action has been shaky. That is not normal behavior unless they're positioning for a bigger move ahead. Yet, even with all this inflow, XRP's chart has been fighting resistance. The coin recently broke out of its bullish channel and tested the mid-range, giving us that pullback down to the low $2 area. Traders are asking, is this the reversal or the calm before the next drop? So here's what you need to watch live today. The first key level is $2 to $2.02, the line that bulls absolutely must defend. If XRP stays above this zone, the market stays bullish. As long as this support holds, the path is open for XRP to climb back toward $2.50, where we hit the previous rejection. But if the bears push XRP under $2, the chart gets ugly fast. The next downside target sits around $1.77, and if we hit that level, we could see panic selling, fear candles, and liquidation spikes. Now let's talk about what could flip this into a bullish breakout. Keep your eyes on the $2.20 to $2.50 resistance zone. If XRP manages to break and close above that range, the next target becomes $3. Clean, psychological, and the level analysts have been marking for weeks. Money has already started moving in anticipation. Institutional inflow is screaming accumulation phase, and a trend reversal pattern is forming on higher time frames. So, what does this mean for you right now? Simple. XRP is at a crossroads, a decision zone. You're watching the exact battle that creates either a breakout rally or a correction dip. This is where patient traders get rewarded and emotional traders get wiped out. The next few hours of price action matter. Today's candle matters. The volume matters. Everything playing out on the chart right now is the start of XRP's next move, up or down. And look, the crypto market overall is heating up. Bitcoin is stabilizing, altcoins are recovering, and liquidity is rising across the board. When liquidity returns, XRP usually reacts hard and fast. That's why analysts are watching this moment, because XRP is moving into a zone where a trend reversal becomes possible. The divergence is there, the inflow is there, the setup is there. Now we wait for the breakout trigger. So here's the bottom line. XRP is bouncing, but it's not safe yet. Bulls need to push above $2.20 to confirm strength. Bears need to break $2 to regain control. This is a high pressure zone, and whichever side wins this fight will set the direction for the rest of the week. If the breakout comes, expect FOMO candles. If the breakdown comes, expect fear candles. Stay sharp, watch the chart, and prepare for volatility, because XRP is about to choose its next direction. Now let's move into the second phase of today's XRP breakdown, the deeper internal structure of the market, the live sentiment shifts, and the hidden signals that most traders miss. Because while everyone is staring at the price bouncing around $2.18, the real story is happening behind the candles, in liquidity zones, in order book movements, in ETF inflow timing, and in whale activity. Right now, XRP is showing something extremely important: controlled volatility. Meaning the market is moving fast, but it's moving with purpose, not chaos. This usually happens before a bigger move. We just watched XRP reclaim the $2.18 zone, printing strong wicks on the downside, a sign that buyers are absorbing every drop. When you see these kinds of reactions at support, it tells you that whales are buying the dip and protecting their positions. They don't defend price for fun. They do it because they're setting up for the next leg. But here's the twist. While buyers are stepping in, the order books are showing heavy sell walls sitting around $2.25. to $2.30. These walls are designed to slow down momentum and stop XRP from breaking out. But in crypto, big sell walls can also act as traps because when bulls break through them, the breakout is violent. Traders who are shorting get liquidated, retail jumps in, and the price flies. This is why the $2.25 to $2.30 zone is the real battlefield today. If XRP clears this range, the candles will turn explosive. Now let's talk ETF flows, a massive catalyst that most of the market is still underrating. The fact that we've seen over $750 million of institutional inflow into XRP ETFs while the price was declining tells you exactly what smart money is doing. They are accumulating silently. They don't care if price goes up or down intraday. They are positioning for the long wave, and historically, when ETFs start loading up, retail catches on late. This means XRP is currently in an accumulation phase, not a distribution phase. And accumulation phases always end the same way, in a breakout. But before that breakout comes the shakeout, and that's what step 2 is all about. Every major XRP rally in history has had a brutal shakeout candle before the pump. That shakeout is designed to scare weak hands, liquidate over-leveraged traders, and reset the indicators. The wick we saw near $2 earlier could be that shakeout. It didn't break structure, and bulls defended it with force. This is extremely bullish behavior. Let's move to the trend structure. XRP is forming a potential inverse head and shoulders on lower time frames, a classic reversal pattern. The left shoulder is the $2.25 rejection. The head is the dip near $2, and the right shoulder is forming right now at $2.16 to $2.19. If this pattern completes and breaks the neckline at $2.25, XRP could surge straight toward $2.50 to $2.60 with ease. Volume is also shifting. We're seeing declining sell volume and increasing buy-side pressure. That's what you want during a reversal. Momentum indicators like RSI are flattening out, not overbought, and ready for another push. Money flow index is moving upward again, showing capital entering the asset instead of leaving. These are the small details that confirm the market is preparing to move. But here's what matters most, the reaction at $2.20. If XRP breaks and holds above that level, the market will flip bullish fast. If it rejects again, expect another test of the $2 support, and that will be the final decision zone before the bigger weekly move. So step 2 takeaway is simple. XRP is tightening. Pressure is building, whales are loading, ETFs are absorbing supply, momentum is shifting, and the chart is preparing for a decisive breakout setup. All eyes remain on the $2.20 to $2.30 region. This is where step 3 will either begin the breakout or begin the shakeout. And now we enter step 3, the moment everything comes together. The pressure, the bounce, the hidden accumulation, the whale defensive support, everything is converging right here, right now, into the most critical phase of XRP's next potential breakout. This is the part where the noise disappears and only the structure matters. XRP is sitting just under the breakout zone, and this is where the strongest moves in the market begin, not during the pump, but during the quiet tension right before it. Right now, we are watching XRP coil tighter and tighter around the $2.20 to $2.25 since resistance. Tapping it, retreating, testing liquidity, reloading, and coming back again. And every time it returns to the level, the wall gets weaker, the sellers get thinner, and the probability of an explosion increases. This is how breakouts form: slow pressure, repeated tests, shrinking supply, and then the sudden ignition candle that liquidates shorts and sends the market into shock. And make no mistake, XRP has all the ingredients for that ignition candle. We already saw bulls defend the entire $2 region with absolute conviction, sweeping liquidity and immediately pushing back above the danger zone. That wasn't luck. That was controlled defense, and it transformed the chart from a breakdown threat into a reversal setup. Meanwhile, ETF inflows continue to rise even in this tight range, meaning institutional buyers are still absorbing supply while retail hesitates. That's bullish. That's accumulate. ION. That's big money preparing for a larger cycle. When the liquidity of an asset is being quietly removed by ETF vehicles, the price doesn't react immediately, but when it does, the move is often violent. Now look at the structure forming on the chart right now. XRP is building a 3-phase reversal, a classic Wyckoff pattern. Phase A shakeout near $2. Phase B consolidation around $2.10 to $2.18. And now phase C, where price attacks the neckline. If this pattern completes, the upside target becomes clear, $2.50 first, then $2.75, and then the psychological magnet of $3, a level that has been in the crosshairs of analysts all month. And if XRP ever clears $3 with volume, the entire trend flips macro bullish, opening the door to a wider move toward $3.50 and beyond. But everything starts with the breakout above $2.25. That is today's battlefield. What makes this breakout zone even more important is the liquidity sitting above it. There's a cluster of stop loss orders from short traders placed between $2.27 and $2.32. If XRP triggers these, it becomes a chain reaction. First stop losses get hit, then short liquidation spike, then momentum traders pile in, and the breakout candle extends far beyond the resistance zone. This is how we get the flash pump candles, the ones that rip 8 to 12% in minutes. And XRP is known for those. If the timing aligns with ETF inflow updates or even a broader market bounce, the move becomes even stronger. But we also need to stay realistic. If XRP fails this breakout and gets rejected again at $2.25, we return to the retest zone at $2.10 to $2.12. And in the worst case, a final shakeout toward $2 could happen. But if that deeper dip forms, it becomes the last reload area before the next attempt, because the structure, volume profile, and accumulation pattern remain bullish unless $2 fails completely. The bulls have already shown they're willing to protect that zone. They've made it clear this is the line they will not let break without a fight. So here's the key message for XRP holders right now. We are entering the decision candle. This is where volume increases. This is where momentum returns. This is where whales reveal their hand. This is where the breakout becomes real or the shakeout becomes savage. The next move will be strong and it will be fast. XRP is not in a neutral position anymore. It is in a compressed spring pattern where every hour of sideways movement adds more energy to the system. When that energy is released, it will not be subtle. So stay focused on the critical level, $2.25. When that level breaks with volume, XRP enters breakout mode. When it holds with weakness, XRP enters shakeout mode. But either way, this is the moment the market has been preparing for through accumulation, through ETF absorption, through the silent tide of capital flowing into the asset.